Good afternoon, this is Bob Iaccino coming in from the CME Group trading floor in Chicago. Talking copper futures, slight upturn in copper today, less than 0.25%. It was very, very slight. But after two down days, we got a little bit of a reversal in copper. Now, those two down days were relatively strong, and they were definitely based off of the dollar relationship. We haven't had a lot of data come out that would affect copper either way. We can almost argue that some weakness should be shown in copper based off of the UK construction data, although it's not as big of a copper market as China is. But the dollar relationship has really taken hold in the copper markets based on, again, sort of a lack of data out of China and some of the other large consumers and producers of copper. We haven't heard anything new about any strikes. That dollar relationship, as with most commodities, the dollar gets stronger, the commodities get weaker, and vice versa. And today we have the dollar down ever so slightly, less than 0.5%. That's the dollar index. And that's mostly, again, off of a lack of data of any sort to push the dollar in either direction. Waiting for non-farm payrolls, waiting for some more of the energy data that we'll get later in the week. So the dollar doesn't have any real direction, but commodities themselves, for the most part, energy, base metals, and precious metals, outside of any other data pushing it, have an inverse relationship to the dollar, and copper is definitely being taken a little bit higher by that. Now, also, Friday is going to be critical based on where copper is. If you look at a longer term chart, a weekly chart, copper's basically had two sideways weeks, but where it sits right now is a pretty good close if we can be there on Friday. 295 is actually sort of a pivot level for copper, medium to long term. 297 is the daily resistance everyone's going to be looking for. But you can fall short of that, but if you close above 295 on Friday, that Friday close is what's going to be critical. Then you can get a run up in copper, and it'll have a lot to do with non-farm payrolls that we have on Friday. If those are strong, if those are tending to push the dollar in either direction, for example, strong non-farm payrolls might give the market an idea that the Fed is going to hike more aggressively, strengthen the dollar, and push copper lower. Vice versa, if we get weak non-farm payrolls, that data could reverse completely. The dollar could get weaker and copper could rally. And that's what we're looking for to see where that Friday closes, to see where the continuation of copper is going to be. But again, outside of any dramatic data out of China, Australia, or South America, you're going to see that dollar relationship take hold. Friday will be critical. This is Bob Iaccino talking copper futures from the CME Group trading floor in Chicago.